traders, and welcome to another video review. Today is Wednesday, June 12, 2024. Let's find out what's happened on the markets overnight and what kind of events we have for today. Chinese CPI data disappoints the market participants with the actual reading of minus 0.1% or 0.3% only, and PPI data deteriorates a little bit less, from minus 2.5% down to minus 1.4%. So the Chinese data quite not that good as expected. GDP from the UK is scheduled for release at 8 o'clock. The market participants expect a drop from 0.4% to 0%. 0% GDP is expected in the UK. There is more of the data scheduled for release from the UK. Industrial production, manufacturing production, quarterly GDP change, trade balance, and trade balance with the non-European Union countries. So all of this data are scheduled for release at 8 o'clock. Very, very interested bag of data. Together with the GDP from the UK, German CPI is expected to be released at 8 o'clock as well, together with the German Bundesbank speak 1 hour later. The market participants expect German CPI to decrease from 0.5% to 0.1%. At 11:15, ECB Supervisory Board member Tuominen will give a speech, and 15 minutes later we got the German 10-year Bund auction as well. At the same time, ECB Schneider will give a speech, and then we are entering the New York session. US session, US CPI and core CPI data are scheduled for this at 2:30, and the market participants expect the CPI to stay at the same level of 3.4%, but the core CPI to decrease from 3.6% to 3.5%. Plenty of speeches from the Eurozone officials. The Guindos and Macau will give a speech at 3 and 3:45. Tuominen will speech again at 4 o'clock, and German Buba Mauder will give a speech at 4:05. So as you can see, plenty of the speeches today. Crude oil inventories from the US are scheduled for release at 4:30, and federal budget balance is expected to be released at 8 o'clock. The main event of the day, the Fed interest rate decision, economic projections, FOMC statement, and the press conference will take place at 8 o'clock p.m. and at 8:30 press conference will start as well. We got some speeches from the Bank of Canada governor. Mackem will give a speech at 9:15, and 9:30 there is a German Buba president Joachim Nagel to give a speech, but those speeches might not be that interested as the Fed interest rate decision. The market participants expect Fed to hold the interest rate at the level of 5.5%, so any kind of a different decision than this will spike a great volatility on the market. So let's find out what's going on here on the market. Let's start with the euro dollar as usual, because it's plenty data related to this pair, and then we'll take a look at the pound. For our chart of the euro dollar is showing us a rejection of the trend line. The rejection of the trend line after the lower high was made at the level of 1.0774. We got very nice movement to the downside. We can see it here, and we again touched the technical support at the level of 1.0724. The local low was made at 1.0720, so 4 pips lower. In order to move higher, the bulls need to break above the orange trend line and above the supply zone located between the levels of 1.0789 and 1.0806. So only decisive breakout down from the decisive breakout up from the extremely oversold conditions on the 4-hour chart would give us some kind of a perspective for bulls. Otherwise, there are different levels waiting for the market participants just below, like as I said, 1.0724, and then there is 1.0650, so there's a 70 pips difference here. As you can see, this steady movement to the upside might have been temporarily suspended as the market made a very sharp decline towards the extremely oversold conditions. Some sort of the, of course, pullback is expected from here, but nevertheless, if we will assess this situation, this scenario as the prepare time for the FOMC interest rate decision, and then increase of in the volatility, especially if the interest rate decision is not in line with the expectations, there we might see either breakout to the upside in case the if FOMC or Fed will cut the interest rate, or drop down in case of the FOMC or Fed will hike the interest rate. Okay, so that was the euro dollar. Now British pound. British pound is waiting for the data. The data will be released very soon. Now we are still above this trend line. Let me just show you guys this trend line. Yeah, we are trading above this trend line, but we are dangerously close to the lower limit of this range that is located between lower trend line, moving average, and yesterday. And sorry, not yesterday, but the general intraday technical resistance 1.2742. The local lows were made a little bit higher, 1.2750. However, they are still between the 50 periods moving average, which is located at 1.2751. So right now, with this kind of momentum, which is testing the level of 50 right now, we can have a breakout to the upside, and market is clearly waiting for this kind of a situation to break above 1.2745 and then 1.2751 and try to challenge again the technical resistance located at 1.2739. If data will disappoint, we might see very sharp decline, very sharp breakout to the downside below the trend line, and then of course 1.2675 might be tested, or even the supply zone 1.2644, 1.2634 might be tested as well, and the momentum would decline even lower from the current level. So very interesting situation here, quite different than the euro dollar, because euro dollar is already below the trend line, all right, and British pound is in a different situation. However, please stay focused, because the British pound might follow the euro dollar path, especially after the CPI data, GDP data will be disappointing, and the interest rate decision will be surprising for the market participants. Let's just take a look at another pair that is connected and susceptible for the situation on the interest rate, with the interest rate, which is of course US dollar versus the Japanese yen. We all know that the level of, let's say, this 160.20 is the level that needs to be closely observed, but we got one more very interesting situation here. We got the level of 157.68, and then we have 158, I guess 57.98 that constitute the supply zone, right? So why I'm talking about it, because with this kind of momentum, market is slowly moving towards this zone, of course, and this is the key zone that holds the bulls to test the 160 level. The recent market movements were in three waves, but the price is still above the 50 and 100 periods moving average. With this positive momentum, we might see some sort of the test of this level. If we zoom in, we can see that the market made a local high roughly around 157.40. So there's only 40 pips. Market is 40 pips away from the key technical resistance and a part of the supply zone. 154.56 is the level of the technical support. The other level is located at 155.13, and the one that we are mostly let's say interested in is 156.49, the one that is in between the 150 periods moving average. So any breakout below this level will open the road towards 155.13. So that's the outlook for the US dollar to the Japanese yen. Let's just take a look at the US dollar index. Just before the Fed interest rate decision, we have the positioning to the upside as the market breaks above the technical level of 105.13 or even higher, 105.15. And now this level might be acting as the technical support. Nevertheless, you can see that even if we spike to the upside, then slowly over the time the market keeps moving lower. But this spike to the upside might be the beginning of the something new, and it all depends on the situation with the Fed, of course, because it might fuel the rally, it might not. The next and the nearest technical resistance is 105.43, and the market is now locked in between these two levels, support and resistance, as the market participants await the Fed interest rate decision. In case of a breakout, the next target is 105.71, and the breakout above this level opens the road towards 106.50, the high from the April 2024. So it looks very nice for the bulls. However, the market might be coming off the extremely overbought conditions, might be testing this technical support back once again before we will see any substantial rally on the US dollar index. So please be aware of the situation with the plenty of data releases, important data releases, both from the Eurozone and both from the US, and please again stay focused during the data release in the US in form of the Fed interest rate decision. For today, again, 5.5% was the last one. 5.5% is expected by the market participant. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.